Okay, let's get started. We'll look at the stock charts, figure out what's going on. And we're just going to start out here with the triple Qs. So yesterday I talked about this. I said we got our sell signal. There it is right there on the daily chart. And I said I expect some sort of a bounce tomorrow and possibly even into Friday. And maybe they'll like to close the week on an up week or a positive note. Doesn't change the fact that we have technical damage that's been done to the chart, and I think we're actually heading lower. So basically, let me kind of narrow in and show you kind of where I think this is going. Here's your daily chart. You have the uptrend light right here in triple Qs. We had negative divergence across multiple time frames. We don't yet have that PPO crossover. As I zoom in, you can see it's just right there. So it's almost about to cross. Likely that will come with some sort of another move down. But we're getting a counter trend bounce today, and that's to be expected. Going to the hourly here, I think we're going to head. I think the highest this thing's going to go is about 304 in the triple Qs. A little bit of a support shelf right here, which should now be resistance, and I think it's likely that this bounce is going to get sold into around this area. So what I'm actually doing is adding to my short position right here, and I'll just, when we get another leg down, or if we get another leg down, I'll likely cover some of that position with profit. Now, the thing is that you have to understand this market is a buy the dip market. So there's a big cohort of people that basically will buy every single dip regardless of any chart fundamentals, any technicals. They don't see those things. All they know is that buying the dip has worked for the last 10 years, and so they're going to just continue to do that until they're proven wrong. So when you get sell signals, this doesn't necessarily mean that it's the end of the sell-off. It's just you got the sell signal. This is a dip. It's expected that group of people is going to step in, and especially in the very beginning. And so that's, I think, what we're seeing. We'll watch for further price action to see what actually plays out, but I do expect that 304 or so is likely the high of this counter trend bounce, and I'm expecting the short-term trend at least to be down, and we actually head lower. So where do we go? Well, you can see here that we're possibly kind of making like a little flag, a bear flag, something like that. And the flagpole really started, it really started about right there. And you could say, and it went down to there. So you could say a break of about right there. So I would say the next leg down gets us in the 294 area. That was a level of resistance right there. And so, yeah, I think the next leg down gets us probably around in that 293.70, 294 area before we get some sort of a reaction. Okay, so that's my update on Qs, and that's what I'm expecting. I'm expecting lower prices to start from around the area that we're at. SPY. So the SPY didn't have the same kind of look that the Qs did yesterday. So we don't fully have that sell signal in the SPY. Yeah, we're below it now, so you could say that this is a sell signal, but this is a daily chart, and so you really need to see that daily close. Ideally, SPY impulsively starts to sell off throughout the remainder of the day, and you get a red candle with a daily close below this trend line here. That would be your sell signal in SPY. Looking at the hourly here, here's your breakdown. Not that impulsive, and that's the thing. That's why this wasn't a confirmed sell signal. So watch for SPY. If you're going to get that sell signal, it's likely that this is going to sell off and close somewhere down here. Maybe come down and fill this gap at 362.45, and close down around there too, giving you that daily sell signal. I think that's what's going to happen because I'm bearish on the Qs, and the SPY will have a hard time moving up if the Qs is selling off. So if I'm right on the Qs, I'm likely right on the SPY. Doesn't mean I'm going to be right on either one. Let's look at gold here. So gold continues. If I go to the daily, well, we can look at the hourly here. gold continues to work its way down this downtrend. This was your bull trap right here. We talked about that. And here's your downtrend. It continues to work its way lower. And so until you see an impulsive break higher, that's really your next buy signal. Or obviously buying at support. So you can buy two areas you can buy. You buy at support, or you buy on a break of resistance. Resistance is up here, that's your downtrend line. So an impulsive break above that would be a buy signal. Or down here around 1790 is your major support. So we're really coiling into this area. I think what's likely, or I guess kind of what I'm hoping, I suppose, doesn't mean it's going to happen, but I think it's likely as well. I think we come down and slightly undercut this low right here of about 1765. Just make a new marginal low, nothing major, just creep down there a little bit. And that will put in your, if I go to the daily chart, that will give you your bullish divergence. If we do it anytime soon, you'll come down, you'll have higher momentum on a slightly lower price. That will be bullish divergence, and that's likely the technical posture that this needs to have that impulsive break higher. So that's what I'm looking for. Gold, Barrett Gold, it really looks like it's doing that exact same scenario. Selling off today. If we go, if we get down below this 2250 area and make a marginal new low and do it anytime soon, we're going to get that bullish divergence on the daily chart. Doesn't mean that it will stick. If we continue to sell off, it'll burn through that bullish divergence. But I think it's likely that we hold in that area, the buyers step in, we create that bullish divergence on the daily, and that really starts to give us the setup or the technical posture to make a sustained move higher. And so that's what I'm looking for. And I'll likely be buying or adding to a position, down here. Okay, let's talk about a couple individual stocks. Snap. Where is that one at? That one right there. Okay, I got out of this position. I covered it today. I didn't like the price action here. Took a small loss. Again, you're not going to be right every trade. Nobody is right every single trade. So it's all about position sizing. If you take too large of a position in any single trade and you're wrong on that trade, it can wipe out your profits on other trades. So I like to take similar position sizing on most of my trades. And then equally, if I see something that's not working and technically it's no longer working for me, I cut my losses. Now, Snap still has bearish divergence, but I don't like this price action today where it came down and then started to, looked like it started to head back down into this channel here, but then has impulsively kind of ripped higher. And with these candles here, I think there's some headline about Facebook and getting some antitrust things. So it's likely that's what this is in Snap. And if you go to the daily, you can see it's starting to break higher. Now we still have negative divergence. It's still there, and and that might still play out. But I don't know if this is going to make like some sort of a melt up move or a straight up move before turning lower. And I don't want to ride that out. So as of right now, I just cut this position. And moving on to other trades. They don't all work out. So we keep our losses small and we look for the winners. Speaking of a winner, let's look at ExxonMobil. So this is an example of a trade that was a winner. Obviously, we were buying it. I bought it here on the breakout, added to it right down here. And that one, really from the lows to the highs had a gain of about 43%. So Snap, losing 6% or so. Versus a 40% gain. You can see how you can still be profitable even when you're not 100% right. And again, nobody's 100% right, so including myself, obviously. Now, ExxonMobil has room to run higher, but the thing that I don't like about ExxonMobil is here's the energy sector, EXLE, and we're coming up. This is your island cluster reversal top right here. And we're coming up into that resistance zone where there's likely to be some supply and some sellers up here. It can go a little bit higher. I could see them popping it up into this 44 area. and then doing a stop raid basically, and then selling off. But I think we're in the area where it's likely to get rejected. FedEx, this one still looks good. We'll see how the day closes, because yesterday's daily close was not an impulsive close. It was just slightly below. I did take a starter short position yesterday on that breakdown because the rest of the market looks relatively weak. So I figured we might get it today with a gap down of over 1.5%. If we close down here or even sell off into the close, that's an impulsive breakdown. That's a legitimate sell signal. And you've got everything looks bearish on this chart. This is one of the better looking charts. You can see you have daily negative divergence right there. It's starting, it's confirmed basically because the RSI's turned down. Look at the PPO. You're starting to cross right there. So it looks like that's a confirmation of PPO crossover. You have PPO negative divergence. Basically, that's been building for a while right there on the daily chart. And you've got a break of a bearish pattern, which is a bearish rising wedge, and you've got a break to the downside. So in general, everything looks good. The only thing I guess that stands out to me that maybe is not the best is the volume. See the volume down here? Yeah, so yesterday the volume didn't show up, and that's kind of to be expected because it marginally broke down. So it wasn't really a sell signal yesterday, so there was no volume. But today we're not getting any volume either. So let's see if the selling picks up and we get that volume spike. Ideally, when you have breakdowns, you want to see confirming volume. You want to see people exiting the trade, and we just don't quite see that in the volume. So I guess that's the one. That's the one con is we just don't have that volume. Oh, this one drives me crazy. Sometimes you don't get them all right or your timing's off. So GM, I covered my short trade yesterday because I didn't like the fact that it didn't sell off at all. Yesterday it showed relative strength. The market was selling off, and yet GM was just basically flat, slightly up, but pretty much flat. And when I was looking at my trade and the price action, I was at break even in my trade, my personal position, and it was showing relative strength. So it seemed like something I just didn't want to be in. I didn't want to be involved in a stock that was showing relative strength, and especially if I'm at break even, I don't have a loss. Nothing lost, nothing gained. So I exited the short, and then obviously today down 4%. It's showing that weakness today. So yeah, hopefully somebody shorted this thing. I've been pointing it out. I think it likely comes down to this trend line, and obviously it's pointed that direction now. So I don't know if we'll get there today, but maybe Friday or something. But around 41 area, and then we'll see how that reacts. Okay, Tesla. So obviously this is the prime candidate for the buy the dip crew. Tesla, I think they'll just buy this thing every dip they can get until they just get destroyed. Doesn't mean that it can't continue to go higher, and obviously this thing's wrecked a lot of shorts. But one thing about a stock is it's not going to just wreck only shorts. It's going to make the bull. The bulls are going to have some pain too. So likely it's beat up the shorts pretty good, and maybe now it's going to change and start beating up the bulls. So what I would look for is a failure or a breakdown. You can see here, actually, this is right there. There's your resistance, and you see those 3 reaction candles right there. Also right there, this big breakout candle stopped right there, and then it finally broke out, came down, held support, came above, then it broke, and now we're having a kickback rally, and you can see exactly where it's stopped so far. So I think it's likely that that's the end of this counter trend bounce, and we continue lower. Flipping over to my trading platform here, I use Lightspeed Desktop Trader. You can see the sellers are starting to step in. This is the 1 minute candle. Sellers are starting to step in here on triple Qs. So again, I just mark out the lines that I show you guys on my trading view, mark it out, keep an eye on it in my trading platform. And again, like I said, I reshorted it, or I added to my short, I guess, up here and looking for this to continue to sell off. Same with Tesla. You know, I think Tesla's kind of hit the, you know, I think this is about the high. I wouldn't expect it to go much beyond this 624.70 area. And so keep an eye on those. Peloton. All right, so what's going on here? So I took a short yesterday on this, starter short. You know, I always start out with a starting position, and then when it starts to show me that I'm right, you can add to it. Took a starter short, sold off. We're having a kickback rally. This is a false breakdown. This is the area where they try to trick you. So basically, it's either going to hold here and continue higher, or it's going to reject and sell off. I don't know. So I'm going to just sit on my starter short position for now till I can see what's going on. You know, basically this thing, it's, you know, I'm down about 1.5% on it. So that's reasonable. And, you know, if the market starts to sell off, I suspect this will too. A lot of these former momentum stocks, what I would say are the stronger companies, like Adobe, I'm seeing weakness in those things, and I'm seeing the strength in these, like, you know, Pelotons and kind of the weaker companies, basically. Adobe's an established company, and it's selling off. You can see it's, you know, it's downtrending. Here's your breakdown. Here's your what do they call it? A bear flag, and then you're continuing to the downside. So that looks weak to me, just to see these stronger companies sell off. Looking at the daily chart here on Adobe, this is the support line that I have on it, and you can see we rejected, recovered it, rejected. So it's getting kind of messy, and then came back up and getting rejected again. I suspect we start to kind of move away from this, and I think it's to the downside again. Next level of support, yeah, you could probably draw something out right here like that. So that might be your level of support right about 470, 471. We break that, then I think it's likely we head down to 424. And you can see, like, NVIDIA, this is, you know, the market had a little bit of a bounce, but NVIDIA, and here's NVIDIA's bounce, but it's already being sold into. So again, that's just showing weakness. We'll see how the day closes. Obviously, this is a daily chart. Things can change, but this chart tells me you've got negative divergence, negative momentum, negative divergence, and you've got downward price action. Now, we haven't definitively broken this big sideways trading action. I think for that to take place, we need to break this 475.07. So that, I believe, is the next target. I think we're going to head down there. From where we're at now, that's a drop of about 8%. Likely we'll get a reaction there, and then we'll have to see. So I'll probably be, I'll be looking to take some profit down here at that level. I'm still long this coffee, this Joe. It hasn't done anything for a while, but looks constructive. Looks like we got a bull flag going on. So you've got the flagpole. You've got what looks, this is kind of, it's not the cleanest, but maybe something like that. And then, you break out to the upside. So that's what it looks like is going on. And I'm going to remain long while that continues to consolidate in this area. I think we head up to 40.70. That's really the next target. You can see these kind of double top area. So 40.70, and then likely if we get up there, I think it's possible that we can start to break out and really start to make a potential. This is potentially a bottom in this commodity. The reason why I think that is you can see we're making higher lows. So you've got this low right in here, and then you've got a higher low right in there. So we need to see a higher high. So a break above this 40.70, 40.60 area, somewhere up in here, that's going to be a higher high, and it really starts creating that uptrend pattern. So I'm sticking with this one for now. Still looks good. And we'll wrap up with volatility. So here's UVXY. Another one you could look at is VXX, something like that. And yeah, it's been a while since I looked at this one. But they're both the same. And you've got this bullish falling wedge here. You have a slight breakout, although not impulsive yet. So again, volatility is not telling us that there's a big breakdown. Usually you're going to get the volatility spike when the masses realize that there's, you know, a change in trend into the downside typically. So right now the masses don't realize that because we're getting a counter trend bounce. Everybody thinks everything's good. On the next move down or the next spike down in the you know, the SPY and, you know, triple Qs, that's likely when you're going to see the volatility spike. So it doesn't mean that we're going to get that, but that's what I would expect. That's when I would expect that to happen. So watch for that. As of right now, volatility, I started to nibble on this, and basically it looks constructive. You've got bullish divergence right there. Let me get rid of that. See, hourly bullish divergence right there. So this was a lower low, but on higher momentum. So we're building bullish momentum. We just haven't had that breakout, you know, that buy signal. So I'm starting to build a position. I start small with this, and I never take a very large position in volatility either. It's kind of the icing on the cake for me when it comes to you know, making a play. So I'll have a much larger position in triple Qs, shorting Qs, something like that, and then volatility will really just be the icing on the cake. If or when we get that big volatility spike higher, I usually start to sell into that spike. And so looks like we're going to start to get it, but again, it's more aggressive. We don't have the bullish breakout or the buy signal yet. So until you get that, you could obviously wait for that. You could start to nibble. It's really up to each person. Everything in this video is just my opinion, so not trading advice. And that's really all I got, guys. So thank you. Catch you guys on the next one.